A real estate crash is imminent. What do I mean when I say this? Well, in today's YouTube video, we're going to be addressing when do I believe the housing market is going to crash? Is it a good time to buy a home right now? Where do I see the future of real estate prices headed? And a lot more information. Before we dive into all of these statistics, facts, and comparing it and contrasting it to 2008, 2009, make sure to smash the thumbs up button for the YouTube algorithm. It really means a lot. Make sure to subscribe if you've not already done so. I really appreciate all the love and support recently. Thank you again for 5K YouTube subscribers. Furthermore, let's dive into this video right now, brothers. Okay, so first up, let's talk about what has been hit and why real estate always lags. Roughly on average, if you do your research, about 2.4 years behind when the equities market drops and gets its bottom point. Now, what we know is cash has been getting hit by massive amounts of inflation. The crypto market has been getting destroyed with people selling out and getting liquidated due to the asset valuations dropping. And the stock market has been an absolute slaughter market going downward. We've seen companies like Facebook, Amazon, PayPal, etc. down almost 75% or more for some of those markets and some of these companies that we're talking about. And I believe that real estate is next. Why do I believe so? We're going to dive into all of that right now. Now, if you look right here on a 30-year fixed mortgage rate, the national average is about 5.57%, and the bank rate average is about 4.88%. And I do expect these rates to continue to increase as the Fed has to continue to raise interest rates because they have printed too much money and we are in a hyperinflation environment, as we've talked about before. Now, again, we've also talked as the Fed continues to raise interest rates, the mortgage rates will continue to increase. People will have less purchasing power. That is, unless you have more liquidity or cash on hand, which you'll see the real estate prices will drop, and then you'll actually be able, if you have a cash position or a war chest, as I like to call it, you'll actually be able to increase your return on investment if you have cash. And you should actually like it when the Fed raises rates, because then you're going to be able to buy more of an asset vehicle for a lower valuation. You don't really necessarily care about the interest rate because you have cash to buy it. Now, existing home sales fell in April to the lowest level since the start of the pandemic. This is scary, brothers, and the reason I say that is because the pandemic was almost like, the economy shut down, and we're seeing numbers since the lowest level since the start of the pandemic, which really reminds me of 2008, 2009. It says sales of previously owned homes in April fell to the lowest pace since the COVID pandemic started, according to the National Association of Realtors. We are moving back to pre-pandemic sales activity, but I expect further declines, says Lawrence Young, chief economist for the group. So this is big news. Now, this is also something very important to look at. Mortgage application volume fell 11% week over week as mortgage rates stayed over 2% higher than a year ago and closed to the highest level, key, since 2009. Refinance and purchase applications were also on a downturn, down 10% and 12% respectively from the previous week. This is very important to keep in mind because, again, we're seeing the highest levels of decline in mortgage rates. Obviously an increase in mortgage rates, but the highest level since 2009 of refinance and purchasing applications since 2009, which is very important to keep in mind. Home affordability is nearly the worst on record as mortgage rates spike. The average rate of the popular 30-year fixed rate this year at 3.29% and hit 5.55%. Again, we just went through the mortgage rates and how they are really increasing at a rapid rate. Now, something you have to keep in mind, and I always tell people at Brotherhood Finance and our fellow brothers, is real estate is always the last asset vehicle to crash. And what I mean by that is if you study 2008, 2009, when the equities or the stock market bottomed, it took roughly 2.4 years for the housing market to find a bottom. So it always lags behind. You have to keep that in a frame of mind. So what I, recommend, or not even recommend, but suggest is, wait to buy real estate right now. With the rates continuing to increase, it's going to make homing and housing look less attractive, which is going to cause the prices to further decline. And if we're actually in a true recession, we're going to need to see a couple things happen. One, the stock market bottom. Two, people are going to have to start losing their jobs, which I think is already starting to occur. And 3, we're going to have to see home prices start to go down and what I like to call death, divorce, and defaults. That was how we talked about how you can prosper from a recession. Those are the 3 things that occur. And once we see that happen, that's when we're going to see housing reach a bottom. And I think that's a perfect time to go in, execute, and buy low and sell high. So rising mortgage rates are causing more home sellers to lower their asking prices. About 12% of homes for sale had a price drop during the 4 weeks ending April 3rd. That's up from 9% a year ago. Again, another example, home asking prices appear to be returning back to earth in many major metro areas despite record low inventory. So this is happening across the world, happening mainly in America. And as you can see, the 30-year, we've already went over the 30-year, but it reaches its highest point since 2009. That's important to keep in mind. So number 1, don't rush into buying. You need to take in consideration that there's going to be maintenance, high payments. There's going to be, it could be a bad investment. So don't rush into anything. Really study it. Grant Cardone, he talks about look at multiple properties, multiple evaluations, compare, their cash flow, their financial statements that the real estate property will have, the expenses. Make sure that you're not going too small. As Grant Cardone likes to say, the more doors, the better. Don't rush into buying. Number 2 is you have to take in consideration, is it good to spend your money right now? Is the cost of your money worth it right now? Or should you wait to be able to, really buy more with less capital when the price of the real estate property goes down? That's what I like to do. Number 3, is it a realistic budget? Is the property priced equivalently with the market conditions? Is the mortgage payment good? Is the property taxes good? What is the insurance going to look like? These are all things you need to take in consideration. And number 4, of course, is the cost of buying. So let me put that into perspective for you, brothers. Here's an example. If you're buying a $400K home, you're going to have about a $4,000 closing cost, a $7,800 a year taxes, insurance / repairs, and $20,000 when you're selling the property. So you need to take in consideration, what is the cost of buying it going to be look like? And number 5, don't ever buy for the short term. At least we don't preach that here. You need to buy for the long term, especially in real estate. You're really going to have like a marriage with that property or a relationship with that property. You're going to own it for a long time. Again, it's a tangible asset. It's a real asset. It's something that you need to understand to a high level of degree because you're making a long-term investment in that asset vehicle. You need to make sure it cash flows, that it doesn't have major repairs that need to be done. And really that it's in a great location and it's going to do well for you overall. That way you get the many benefits such as appreciation, tax write-offs, amortization, depreciation, and cash flow. Now again, also off of those 5 points we made, housing supply is finally improving as high prices and rising rates weigh on sales. So again, we're seeing the market for the housing market start to slow down. Again, in my opinion, I don't think we've seen a bottom in the equities market, so I don't think we're anywhere near a bottom in the real estate market. I just see it slowing down. So again, what I'm preaching, what I'm going to be personally be doing is waiting, saving up cash, waiting to deploy it once I see the housing market continue to downturn, and then be able to buy properties and really increase my return on investment. Because as you know, the best time to really make money is during a recession. You need to do the opposite of what people are doing and invest right back into your same very economy that you are in. Again, brothers, I hope you found value in this video. If you did, please make sure to smash the thumbs up button, subscribe to our YouTube channel, and check us out on our other social medias at Brotherhood Finance on Instagram and TikTok, and brotherhoodfinance.com if you want to cop any clothing or support what we're doing. Furthermore, if you want to join our membership below, I'd really appreciate it. Link will be down below. Much love, brothers. Have a good rest of your week, a good rest of your weekend. Peace.